Hey guys, it is Julie here with JT Wealth. In today's video, we're discussing bank stocks, specifically why one analyst is feeling super bullish and what his top 3 picks are. So let's get into it. All right, guys, welcome back and thank you so much for being here. Like I said, we're discussing bank stocks today. We're going to take a look at why one Goldman Sachs analyst is still feeling super bullish on them even after their latest strong run. We're going to take a look at the catalysts behind his bullish outlook and what his top 3 bank stocks are, as well as recent news surrounding them and what the analyst consensus is on those price targets. Just before we get into all of that, this is your friendly reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Also, don't forget to head over to the TipRanks YouTube channel to catch my daily pre-market morning update video, where we're getting you up to speed with everything you need to know before the opening bell. All right, now let's get into these bank stocks. So Goldman Bank analyst Richard Ramsden said on Monday in a new note that first quarter earnings seasons for the major banks, which kick off later this month, will show 3 positive bank stock catalysts. First is with the economy rapidly recovering from the pandemic, as banks are likely to release reserves taken to cover losses from the effect of the health crisis. Ramsden estimates banks will release $5.6 billion of reserves in the first quarter, representing about 15% of earnings per share upside. Second is net interest margins, which are likely to show further improvement sequentially amid the rise in yields in the quarter. And lastly, Ramsden believes banks are poised to show strong fees in their investment banking divisions due to capital market strength. Ramsden foresees the first quarter being a stepping stone to a solid year for the banks in 2021, likely leading to a higher stock price. In particular, Ramsden projects the major banks will repurchase $83 billion in stock this year. That figure could jump to more than $100 billion in 2022. Anything less than a solid first quarter for the banks outlined by Ramsden and many of his peers will probably be met harshly given the run-up in the sector. His top bank picks include Morgan Stanley, Bank of America, and Citigroup. So let's take a closer look at each of those, starting off with Morgan Stanley. Trading under the ticker MS, they're currently priced at $78.73 per share, and you can see that they've had a fairly steady climb upwards in this past year. As is common with many bank stocks, they do also pay a dividend. That dividend is 34 cents quarterly for a 1.79% yield. Taking a look at bloggers' opinion and sentiment, they're coming in as quite bullish over these past few months. Now, good news for the Morgan Stanley dividend is that they do plan to hike the dividend once the Fed permits. Last year, following the coronavirus outbreak, large banks had to stop dividend hikes and suspended their buybacks, given the Fed's restrictions on the same. The aim was to preserve liquidity amid the virus mayhem and subsequent economic slowdown. But in a recent letter to shareholders, Morgan Stanley's CEO noted that in addition to recommencing our share repurchase program this year, we also plan to increase our dividend when restrictions are lifted by the Federal Reserve. For 2021, Morgan Stanley has authorized $10 billion worth of a share repurchase plan. Now, Morgan Stanley has had some notable acquisitions lately. They acquired Solium in 2019, but a big one this year in 2020 was E-Trade. And looking forward, they're also acquiring Eaton Vance, with that acquisition expected to close in the second quarter of 2021. E-Trade came in as a dynamic, tech-driven company with an iconic brand providing access to the next generation. They had over $360 billion of retail client assets across 5.2 million client accounts. And now they'll be bringing in Eaton Vance, which is a high-quality, fast-growing asset manager and is the #1 provider of individual separate accounts. Coming with them, they have 1,900 employees worldwide and over $1.7 billion in total revenue. Now, taking a look at commentary from 2 analysts who just reiterated their price targets on the Morgan Stanley stock on April 1st. The first is UBS analyst Brennan Hawken, who actually raised his price target, saying that he's updating his institutional securities segment estimates after the company's completion of the Eaton Vance acquisition. He adds that Eaton Vance asset under management as of this January was up about 15% higher relative to July of last year, and the market upside has only increased since then. We also had Matt O'Connor from the Deutsche Bank, who reiterated a positive view on bank stocks and mapped out a scenario in which banks' earnings may rise 15 to 20% in both 2023 and 2024. The Morgan Stanley stock has 14 current analyst ratings altogether. It currently comes in as a moderate buy based on 10 buy ratings and 4 holds. The average price target of $85 would be over an 8% potential upside. Our lowest price target does come from a hold rating from 3 months ago, but on the high end we have Andrew Lim from Societe Generale with a $100 price target for a nearly 27% growth potential. The second bank company that Goldman Sachs is feeling bullish on is Bank of America. They trade under the ticker BAC and are currently just shy of $40 per share. And no big surprise here, they also pay a dividend. Their quarterly dividend is 18 cents per share for a yield of 1.81%. They also come in as an 8 out of 10 on the TipRanks Smart Score. Now, Bank of America just recently announced that they are becoming more heavily involved with the healthcare payment technology segment. This was with their announcement of their latest acquisition on April 5th of privately held Axia Technologies. Axia, which is also known as Axia Med, is a company formed in 2015 that concentrates on secure digital payment solutions for medical service providers. Its core offering is a software solution that, in Bank of America words, allows many healthcare providers to offer end-to-end omni-channel patient payment solutions. Working together, we can leverage our joint expertise and capabilities to deliver a comprehensive range of payment and settlement solutions to our healthcare clients and patients, the bank quoted. Matt O'Connor from Deutsche Bank also reiterated his price target for this stock as well on April 1st. And he had the same note, reiterating a positive view on bank stocks and mapping out a scenario in which the bank's earnings could rise 15 to 20%. This would support a further 30 to 50% rise in the stocks over the next 3 years. Bank of America has 16 current analyst ratings, and they're a bit more divided on this one, as it comes in as a moderate buy, and the average price target would actually be a downside potential of just over 3%. On the low end, we have a hold rating with a negative 11% downside. On the high end, we do have a buy from Wells Fargo with a $45 price target for about a 13% potential upside. Now, this third bank stock, analysts are definitely feeling a bit more collectively bullish on, and that is Citigroup. Under the ticker C, they're priced at $72.60 per share. And you may have guessed it, they also pay a dividend. And that dividend is 50 cents quarterly for a yield of 2.8%, which is well above the sector's average. They also come in as a 9 out of 10 on the TipRanks Smart Score. Now, Citigroup just recently appointed a new CEO, Jane Fraser, and Wall Street is anxiously awaiting to see how she will improve returns. So far, she's off to a good start, as their shares have climbed 11% since Fraser took the helm of the bank on March 1st. But a source in contention on the street is how quickly shareholders will see improvement in the bank. Of course, one bullish analyst is Richard Ramsden from Goldman Sachs, who kept a buy rating on the stock after analyzing possible strategic actions that could be taken to enhance the long-term return potential of the bank. While there is no silver bullet that could enhance returns materially, at least in the near term, a series of restructuring initiatives, asset disposals, as well as a more constructive economic outlook could get Citi to higher return on average tangible common shareholders' equity over time. Assuming a broader restructuring, which incorporates a number of strategic initiatives in Banamex and North America retail, Ramsden believes an 11% ROTCE is achievable, which he thinks could lead to an $89 implied equity value. Ramsden believes Citi's risk-reward is skewed to the upside as it explores strategic alternatives. Once again, there are 16 current analyst ratings on the stock. And this one comes in as a moderate buy with 11 buy ratings and 5 holds. The average price target of $81 per share would be about a 12.5% growth potential. The hold rating from Matt O'Connor is the lowest price target with a downside potential of 9%. Richard Ramsden comes in with an $84 price target for about a 15% upside, but he's not even the most bullish. Chris Katowski from Oppenheimer gives it a $114 price target, which would be about a 57% potential upside. So there are our 3 bank stocks that Goldman Sachs analysts are feeling super bullish on. I would love to hear your guys' opinions on these 3 bank stocks or what other ones are catching your eye lately. Personally, when I start to think about the finance sector, I jump to some of the more online focused banks as well that have a lot of great growth potential. So let me know some of your favorite stocks in the comments down below. It does make sense with the pandemic starting to recover that this sector would start to see an influx as people are out spending more money doing more things. And of course, who doesn't love a nice dividend too? Anyways, please keep in mind that these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes. Any investment decision needs to be made based on your own research and due diligence. Don't forget to head over to the TipRanks YouTube channel to catch my pre-market morning update, where every morning, Monday through Friday, I'm getting you up to speed with everything you need to know before that opening bell. If you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Thank you guys so much for watching. I hope you have a fantastic day, and cheers.